When countries such as Russia, China, Iran, and Saudi Arabia move away from using the US dollar, it typically means that they are seeking to reduce their dependence on the US financial system and the influence of US monetary policy. One of the key benefits of using the US dollar as a global reserve currency is that it is widely accepted for international trade, making it a convenient currency for conducting transactions. However, this also means that countries holding large amounts of US dollars are vulnerable to fluctuations in the US economy and monetary policy. This vulnerability can lead countries to seek alternative reserve currencies, such as the euro or Chinese yuan. In recent years, there has been a growing trend among countries to reduce their dependence on the US dollar and diversify their foreign exchange reserves. This shift has been driven by a number of factors, including concerns about the stability of the US financial system, geopolitical tensions, and the desire to increase economic independence. Some countries have also sought to reduce their use of the US dollar in response to US sanctions and other economic measures. By reducing their dependence on the US dollar, these countries can reduce their vulnerability to US economic pressure. Overall, while the shift away from the US dollar is a complex trend with many factors at play, it reflects a broader shift in the global economy as countries seek to increase their economic independence and reduce their exposure to US monetary policy and economic influence. To add more context, the move away from the US dollar is not a new trend, but it has gained momentum in recent years. One significant factor contributing to this trend is the rising economic power of China. As China's economy continues to grow and become more integrated into the global economy, there has been a corresponding increase in the use of the Chinese yuan in international trade and investment. In addition to China's growing economic influence, geopolitical tensions have also played a role in the shift away from the US dollar. For example, US sanctions on Russia and Iran have prompted these countries to seek alternative reserve currencies and payment systems to avoid the impact of US sanctions. The desire to increase economic independence has also driven countries to reduce their dependence on the US dollar. Countries may seek to reduce their exposure to US monetary policy or to diversify their foreign exchange reserves to reduce risk. Some countries have even sought to establish alternative reserve currencies or payment systems, such as the proposed digital currency by China's central bank. It's important to note that the move away from the US dollar is not necessarily a sign of hostility towards the US. Many countries still value their economic and political relationships with the US and continue to use the US dollar in international trade and investment. However, the trend towards diversification reflects a desire to reduce vulnerability to US economic pressure and to increase economic independence. In summary, the move away from the US dollar by countries such as Russia, China, Iran, and Saudi Arabia reflects a broader trend towards diversification and increasing economic independence. While there are many factors at play, including geopolitical tensions and the rise of China's economy, the trend towards reducing dependence on the US dollar is likely to continue in the coming years. It is unlikely that the move away from the US dollar by a few countries will lead to the collapse of the American economy. While the US dollar is currently the dominant global reserve currency, its use has been declining in recent years as other currencies, such as the euro and the Chinese yuan, gain prominence. The US economy is highly diversified and has a large and mature financial system, which is capable of weathering economic shocks and adapting to changing market conditions. In addition, the US government has a number of tools at its disposal to manage the impact of changes in global currency markets, such as monetary policy and exchange rate interventions. While a significant shift away from the US dollar could lead to some short-term volatility in financial markets, it is unlikely to have a catastrophic impact on the US economy. However, there may be some long-term implications for the US if the trend towards reducing dependence on the US dollar continues, such as a decrease in demand for US Treasury bonds and a reduction in the US's ability to influence global monetary policy. Overall, while the move away from the US dollar may have some economic and geopolitical implications, it is unlikely to lead to the collapse of the American economy. The US economy is highly resilient and adaptable, and is likely to continue to be a major player in the global economy for years to come. It's important to note that the US has traditionally enjoyed several advantages as the world's dominant reserve currency. For one, Countries that hold US dollars as a reserve asset can use them to settle international trade and investment transactions, which gives the US significant influence over global trade and finance. Additionally, the US dollar has historically been seen as a safe haven currency, which has made it attractive to investors during times of economic uncertainty. However, the US's dominance as a reserve currency has also come with some drawbacks. For example, the US has often been criticized for using the power of the US dollar to impose sanctions or other economic measures on countries that don't align with US foreign policy goals. In addition, the US's large trade deficits and high levels of government debt have made some countries hesitant to continue holding large amounts of US dollars as a reserve asset. As a result, many countries have been seeking to reduce the dependence on the US dollar in recent years. Some have sought to increase the use of alternative currencies, such as the Chinese yuan or the euro, while others have looked to establish alternative payment systems, such as the Russian-led SWIFT alternative. In addition, some countries, such as China, have been actively working to promote the use of their own currencies in international trade and investment. While it's unlikely that the move away from the US dollar will lead to the collapse of the American economy, it could have some significant implications for the US in the long term. For example, a reduction in demand for US Treasury bonds could lead to higher interest rates and a decrease in the value of the US dollar, which could make it more difficult for the US to finance its large government debt. Additionally, a decrease in the US's influence over global monetary policy could have implications for US foreign policy and global economic stability. Overall, the move away from the US dollar by countries such as Russia, China, Iran, and Saudi Arabia reflects a broader trend towards diversification and increasing economic independence. While it's unlikely to lead to the collapse of the American economy, it could have significant long-term implications for the US's role in the global economy.